Hi everyone, I hope you're all doing well, and today I'm talking about 5 stocks that I actually sold on Monday, and I'll go through the reasons why I sold each individual stock. But the whole reason mainly why I sold out a lot of these was to just take a little bit of profit off the table, protect the gains I already had. And like I say, overall I kind of think the stock market is in a quite an overvalued point. When you look at the S&P P ratio, it's very clear to see how overvalued we are right now. And you look at a lot of valuations of stocks, a lot of them are trading at all-time highs. You think about what state the economy is in, and the stock market has been on a good run. But if you think the stock market can carry on going on this sort of rate forever, then you're going to be in for a shock when it actually starts pulling back. And I think that as soon as we get that kind of realization about, there's not that many, we're going to run out of buyers at some point. And when that snap happens and we start going down, you'll see a lot of these people that have bought and see the panic on them when these stocks start coming back, start pulling back to realistic valuations. How many start panic, selling out? A lot of these people that have been buying in are going to get, who have been getting the FOMO recently. They're the first people that are going to be hurt on a stock market pullback, and we'll see how what they're made of when their positions start going down 10-20%. I always think about like elastic band, and eventually, if you keep pulling that elastic band, the further you pull it eventually, and you let go of that elastic band, it snaps back, and the more you're pulling the stock market away from where it should be, and when it gets released, it's going to snap back quite a bit. And at the moment, that elastic band is going quite far back. So it's one of those that, you're going to be in for a shock, and whatever gains you have, them gains aren't profit until you've actually sold them. And it's always good that you have that cash pile built up, so when the stock market pulls back, you've got them opportunities to go buy them stocks. And also, when you look at the valuations of what upside these stocks have from here, is there other potential out there? And I have found one company that I'm a really big fan of, and that I probably will have bought by the time this video goes up, and I'll probably tell you guys about that company on Thursday. If you're on the patrons group, you guys will already know what stock that is that I'm looking at. So I've kind of thought about building the cash pile up, taking some profits away, think about that elastic band, and is it going to get snapped, and we're going to see that pull back. And also I found another opportunity where I feel like there's big upside here. So all that combined, kind of led me to selling a few of these stocks that we currently have up on some really nice gains. And like I say, I'll try walk you through some of the reasons why I did sell off a few of these companies. So number one is Microsoft, and I really didn't see myself selling this one, but it came to the right time for me to let go a little bit of the shares that I do have in Microsoft. So in Microsoft, I actually sold 30% of my position. On that position that I sold off, I made 100% gain on this stock. And it's done really well. It's still one of my favorite companies. It's still a massive position in my portfolio. I've still got a good holding there in Microsoft. But I look at Microsoft now and I look at what's going on with the stock. It's trading at all-time highs. I look at the P ratio. It's trading at the highest P it's ever been. And I'm looking at this company and thinking, it's a great company. I'm going to pick up some dividends. But how much growth is left in that share price right now? At what Microsoft is priced at, how much further can I see this going? And sure, I can see the share price going up in this company, and I think it will carry on going up. If I didn't think it was going to carry on going up, I would have sold it all out. But I look at it and I think it's a very high valuation. The company's growing okay. It's going to grow around about 9-10% revenue and profit, which is pretty good going. It's got the Xbox coming out, which will be pretty good. But at the valuation it's at, where's the stock going to go? And I can't really see at this valuation Microsoft going past $300 in 2 years. I can't see it going much further than that. Now, with what's going on in the stock market, anything could happen. But realistically, how much it's gone up, how many people are going to come in, I can't see it going past that $300 mark in 2 years. And when I start looking at that and I work out the upside in Microsoft, that only gives it, 30-40% upside. And I'm looking at other opportunities and thinking, the chance of a pullback, is there other opportunities out there where I can make 100% upside in them 2 years? And I'm kind of like eyeing that up, and like I said, the risk that I have of losing 100% profit to kind of gain another 30-40% just kind of made me think, I like it and I don't want to sell that totally out of it, but I've got to protect the profits and go release the money that's there, or some of the money that's there, get that profit to go somewhere else, and I've just got kind of free money to go buy a bigger position in something else. So like I said, it wasn't one that I wanted to totally sell out of, because I believe in the company. I think it'll do well. It's just one of those where I started looking at the valuation and what opportunities could be there to outpace Microsoft from this valuation, and there's a few out there. So I felt that was a good time to release some profit on Microsoft. Number 2 was JD.com, and I'm still a big fan of JD.com. I only sold 25% of my position, so I've still got a big share in it. The 25% that I did sell, I made a 280% profit on, which was really good. One of the best ever on the portfolio. Normally, you know me, I like to get 100% over 2 to 5 years, but JD has done us massive favours here, pulled in a 280% return. And for me, when I look at JD.com, the reason why I sold out of this one is because I've recently started buying Huya, and I don't want to have loads of Chinese companies in my portfolio. And if I am going to have 3 Chinese companies, which I do now with Alibaba, JD.com, and now Huya, is that I'm opening up to that sector, and I don't want my portfolio, if something happens in China, I don't want my portfolio to suffer for it. Bit like the Boohoo situation, so I have to manage that. Obviously as well, I've got a lot of gains there. Like I say, take 25% off the table, go get that to work somewhere else, take that free money, and get that to go make some more money in another position. Like I say, I still believe in the company, otherwise I wouldn't sell totally out of it. It's just one of those where I start looking at releasing some of that profit, get it to go, make some money, and that's exactly what's happening with JD.com. Valuation wise, I think it's at a P of 35, which is a bit higher than what it normally is, but it's not crazy. For a company that's doing 30% revenue growth, 30% earnings growth, it's not crazy valuation, but it is just a lot higher than what it's ever been at, which is one of the kind of things about, is there a pullback that could happen? And that's where we would see the stock market, or the stock as well, pull back, and we'd lose them gains. The thing with the stock market is things happen instantly. You only have to look at Boohoo, and a news article decided to talk about it. The stock goes down 10%. These gains that I have on JD.com of 280% can change overnight. If the US media want to start attacking China, talk about delisting, they want to start talking about trade deal, they want to talk about the Chinese economy shrinking, a lot of these gains on these stocks can go very quickly. And you can look back at a lot of these Chinese stocks back in, I think, 2018, where the prices were just sinking all the way down. And the same could happen once again. It's not impossible, and you've always got to protect them profits. And exactly what's happening now with JD.com, and just protecting 25% of that profit now and taking it off the table. Number 3 was Alibaba, and it's pretty much the same reasons as JD.com. I was going to hold it for 100% gain, but once again, it's just at the highest valuation it has been ever, price wise, P ratio wise. It doesn't normally have a lot of these massive runs. It does have a bit of a history of pulling back at some point, so it might be one that I do go back into and buy a bit more. But same again on Alibaba, I've got a new Chinese company, don't want to be too open to the Chinese economy. Same again, articles pulling back, and I sold 50% of my Alibaba position, and I was currently up 60% on that one. So I did sell that a little bit earlier than what I was planning to do it, but the other, whatever's left, the 50% that's still in my portfolio, I will let that run its course, and that will probably bring me in a 100% return. So once again, just protecting the profits. Number 4 was J&J, Johnson & Johnson, and I sold out this one completely, totally gone, and I only made 15% on this one, but bear in mind this was a dividend stock. It was one of the only 3 dividend stocks in my US portfolio, and I sold out of J&J just because, once again, trading quite a high valuation, but J&J historically doesn't return much. Normally it kind of matches with the market, brings you in, whatever, the average of 8% over a course of so many years, an 8% return. And I do like, dividends, I do like the easy returning companies and stuff, but the problem is like, there's not much more upside here from J&J, unless the stock market, goes crazy forward. And I look at J&J and I think I've got some money in there. It's paying me a nice dividend, but it's not huge. The share price gain's okay, but it's not going to go much more on this. Could I put J&J into another position like Microsoft, like JD.com, like Alibaba, where that money that's tied into J&J makes me 50%, 100%, 150%, 200%? is the other companies out there that money could work a bit more for me, and it is the reason why I've never been a big dividend fan. It's just because, you know, you pick up a little bit of share price gain and a little bit of dividend, and you know, it's only a couple of percent, and there's opportunities out there like these three where you go and make over, you know, 100% gains. And I just feel like that maybe at one point J&J could be the right stock to come back into the portfolio, but right now I just want to release that profit. I've enjoyed the dividend, but I might go and get that money to go and get bigger returns. And number 5 is Walgreens, and same again, totally sold out of this one, but this was actually a loss. This is actually the first ever loss I've actually taken on a stock, which is kind of weird. But once again, like J&J, it was a dividend stock, and I've looked at Walgreens and I thought I could keep getting the dividend here, but the money that's in Walgreens, could it go out and get me bigger returns than what's happened or what's happening in Walgreens? And I thought I could easily turn the money in Walgreens into a stock that brings in 100% return rather than just collecting them dividends. So I thought the money was better going somewhere else, and I've enjoyed getting the Walgreens dividend over the kind of few years, but it's one of those, like, the dividend didn't cover the loss in the stock, which is, you know, not great. So it did take a little bit of the hit. I think by the time you look at J&J and Walgreens, they kind of equaled out profit to loss, which isn't too bad. That's why I kind of like linked them up both selling, because it kind of just cancels out the loss really. And it frees up the cash to go somewhere else. But that's what I always say about dividend stocks, is sometimes the share price can kill you a little bit, because you get your dividends on Walgreens, but the share price, you know, it gets rid of all the dividends that you've taken in over the years, which is kind of rubbish really. And that's kind of why I sold out Walgreens. I was kind of fed up with getting the dividend and seeing the share price go down, and I looked at Walgreens and I thought, normally when a stock goes down, I always buy more of it because I really love it. And I was looking at Walgreens, and I was looking at all my other stocks in my portfolio, and I was looking, this is the one stock in my portfolio I would not buy more of if it goes down. And that kind of said a lot about what I think about the company, that I won't be willing to buy anymore now it's down. And I looked what's going on. The growth wasn't good, the revenue wasn't good, so the share price probably won't go up that much. I looked at the management, the closing stores, so if I'm closing stores, that's only going to affect the company. And I just generally looked at Walgreens management and I went, they're doing a pretty crap job. Like, this sort of company should be able to adapt to what's going on in the world right now, and definitely they should really be benefit from it, and they should be kind of, you know, transitioning into the, you know, the now into the 20s, and, you know, update the services a little bit, and kind of, even if they're a high street store, they could, you know, massively do online stuff, partner up with a lot of people, a lot of online companies, and in store make it a bit more of experience, and, you know, maybe a little bit of spas in there, a lot of like interaction with customers. And I just felt like Walgreens, they just didn't build that up in the stores. You know, I'll go into a store and I think this is exactly what the store was like in like 1990. And I'll go into Walgreens and, or Boots even, and I'm looking, and it's just like the store's just not changed in 20 years, you know? You compare to a lot of other high street stores where it's sometimes now about experience, and you just don't have it. You just don't have it. They haven't changed that much. So I've got to question management there, and that's probably why the growth and earnings hasn't grown. So I think it was time to release that one and get the money to work a little bit better for me. So overall, those are the 5 stocks that I sold, guys. I hope it helps you guys, you know, when you're looking at maybe selling some of your stocks. And overall, I'm very happy what I've done here, and I'll be, obviously, some of this, what's going to happen now is I'm going to keep 50% of these sales in cash in case there's some other opportunities that happen there. But like I say, I found one company that I really like, and 50% of the profit from these stocks will actually be going into that company. And I'll let you know which that company is on Thursday, guys. So if you made it all the way to the very end, guys, make sure you smash that like button, subscribe if you're new around here, and I'll see you in the next video.